The federal government has stepped in to limit the fallout from the second largest banking failure in U.S. history.
This after two banks collapsed in a matter of days. Federal officials insist this will not be a taxpayer-funded bailout. President Biden is expected to address the issue later this morning.
Jared Hill has more from New York.
Federal regulators say they're taking emergency measures to make sure depositors of the now failed Silicon Valley Bank, or SVB, will have access to all their funds starting today. They say they're taking similar measures for investors of Signature Bank of New York, which collapsed yesterday.
I've been working all weekend with our banking regulators to design appropriate policies to address this situation.
SVB's failure on Friday was a major concern to the tech and wine businesses it financed. Its collapse, followed closely by Signature Bank's, raised concerns about how this could reverberate among other financial institutions. Treasury Secretary Janet Yellen reassured customers on Face the Nation.
The American banking system is really safe and well capitalized. It's resilient.
According to a joint statement released by the Federal Reserve, the Department of the Treasury, and Federal Deposit Insurance Corporation, they're acting in a way that, quote, fully protects all depositors. Regulators insist the plan will not include using taxpayer dollars, as the two failed banks have not been rescued. Lawmakers on both sides are hopeful they can be acquired.
That would be the ideal situation, and our delegation that talked to the FDIC last night made that clear.
It is attractive for someone to want to purchase it. It's just a timeline of where to move forward, and the administration has tools to deal with this.
There's also a new push by some House lawmakers to extend temporary lines of credit to the bank's depositors to assist with essential costs like payroll. Jared Hill, CBS News.